Hey Bitcoiners, Lachie here from Edge 21. Today we're breaking down the latest moves in the Bitcoin market where even a tiny shift can signal big changes ahead. Whether you're a seasoned hodler or just Bitcoin curious, stick around as we unpack what's driving the price, who's buying, and what could be next for the world's most talked about asset. Let's start with the numbers. Bitcoin has just nudged up to $93,600. At first glance, this might seem like a quiet day in Bitcoin, but beneath the surface, there's a lot more going on. Here's where things get interesting. Over the past week, we've seen a surge in institutional demand for Bitcoin. According to Coinbase Institutional, sovereign wealth funds and other large players have been actively accumulating Bitcoin in April, even as retail investors have started to pull back. Why? Institutions are viewing Bitcoin as a hedge against currency devaluation and macroeconomic instability, a digital gold for the modern era. Let's look at this graph from Check on Chain. It shows a sharp upward trend in cumulative flows into Bitcoin spot ETFs, with a record-breaking $1 billion flowing in on a single day. That's more than 500 times the average daily inflow for 2025. This isn't just a blip. It's a sign that big money is moving in and they're here for the long haul. While institutions are buying, retail investors are taking a breather. Data from Coinbase and other sources show that individual traders are reducing their exposure both in ETFs and spot markets. This divergence is important. It means Bitcoin's price action is increasingly being driven by long-term strategic buyers rather than short-term speculators. Let's break down the technical. On April 24th, Bitcoin's trading day was a roller coaster. Early in the day, a golden cross on the MACD signaled a possible uptrend, and Bitcoin found support at 93K before rising. But resistance at 93,589 led to a sharp fall, confirmed by a death cross on the MACD. Throughout the day, Bitcoin bounced between key levels with support at 92,400 and resistance at 94,200. This next Check on Chain graph tracks the short-term hodler MVRV, a fancy way of saying our recent buys and profit. Right now, most short-term holders are back in the green, which historically increases the chance of some selling to lock in gains. This can create short-term resistance and volatility near current prices. So what levels matter right now? The $94,200 resistance is crucial. If Bitcoin can break through, we could see a push toward new highs. But if it fails, there's a risk of a sharp drop to the next major support at 92,160. These levels are more than just numbers. They're psychological battlegrounds for bulls and bears alike. Why is institutional demand so strong? It comes down to two things: macro uncertainty and Bitcoin's fundamentals. With ongoing concerns about inflation, currency devaluation, and geopolitical risks, institutions are looking for assets that can hold value in turbulent times. Bitcoin's fixed supply of 21 million and its decentralized nature make it uniquely attractive. This graph from Glassnode shows the total supply of Bitcoin currently at a loss. There's a significant cluster of coins with a cost basis just below the current price, meaning many holders may be waiting to break even before selling. This creates a resistance wall between 93K and 100K, which Bitcoin will need serious momentum to break through. Back to ETFs. The recent $1 billion daily inflow wasn't just a record, it turned ETFs into the marginal buyer in the market. That means these funds are now setting the pace for Bitcoin's price action, absorbing supply and fueling upward momentum. Looking ahead, analysts predict continued volatility, but the overall trend remains bullish. Some forecasts see Bitcoin reaching 103K or even higher by the end of April, with potential for 130,000 or more in the coming months if institutional inflows continue. But as always, external factors like regulation and global events would quickly change the game. This final graph from CryptoQuant shows net outflows from exchanges, meaning more Bitcoin is being withdrawn than deposited. That's usually a bullish sign. Investors are moving coins to cold storage, signaling confidence and a long-term mindset. Well, that's a wrap on today's Edge 21 Bitcoin price analysis. Where do you think Bitcoin is headed next? Let us know in the comments below. Remember, at Edge 21, we're here to keep you ahead of the curve with personalized, noise-free content, from trending articles and videos to real-time price alerts and expert summaries. If you found this breakdown helpful, hit that like, subscribe, and turn on notifications so you never miss an update. Thanks for watching, and as always, stay strong and hodl on.